Traders face all kinds of problems when they trade. Some traders struggle with establishing the main trend, others have problems with their market entries. But what if you developed a trading strategy that would solve both problems? Hey traders, this is Marius, and if you stick with me a couple of minutes, I will share with you a great day trading strategy that will keep you on the right side of the market. The core of this strategy relies on a leading indicator, pivot points, and the accumulation and distribution line, an underrated volume-based indicator not used by many traders. Let's dive right into the strategy and see how it works. Here's the first rule of this strategy. We aim to buy at the central pivot point in an uptrend and sell at the central pivot point in a downtrend. The central pivot point is the most important part of the whole setup. The location of the main pivot point on the chart represents an important information to be aware of because there is a high probability that it will be reached. Have you ever wondered why pivot points are so popular among traders? Well, that's because pivot points are an accurate indicator and most market participants are watching and trading these key levels. Part of what makes the pivot points so reliable is the fact that they are based purely on the price. In our strategy, we'll consider the central pivot point as the intraday point of balance between the buyers and the sellers. In this area, we'll assume that the largest amount of trading volume takes place. Now, this is how I read the central pivot point in our setup. If the price is above the central pivot point, I consider the outlook as being bullish and consider taking only long positions. If the price is below the central pivot point, I consider the outlook as being bearish and I only look to short the market. If the price decreases below the pivot, the first target will be S1, and if the price continues to decrease, the next target will be S2. If the price rises above the pivot, the first target is R1, and if the price continues to increase, the next target is R2. This strategy is very simple, but is one of the most powerful ways that you can use the pivot points. By using the central pivot point, at the beginning of the day we already know at what price we will enter the market. We just need to time the market and enter in the direction of the main trend. But how do we establish the main trend? With the accumulation and distribution line. Here comes the second rule of this strategy. We establish the main trend with the crossover of the 80 line and the 200 exponential moving average. We added a moving average on the indicator in order to eliminate the noise offered by the 80 line. You can test other moving averages, but from my experience, a longer term moving average added on the 80 line will work better than a short term moving average. Now, here's how we take the signals. We aim to buy at the central pivot point if the crossover of the 80 line and the 200 EMA indicates an uptrend. This means that the 200 EMA is below the 80 line. And we also aim to sell at the central pivot point if the crossover of the 80 line and the 200 EMA indicates a downtrend. This means that the 200 EMA is above the 80 line. Very important, we only take signals around the pivot point. That's the main rule of our system. Here's the Euro USD on the 15 minutes chart. In this chart we have 4 trading days during which we had a downtrend, a small range, and an uptrend. During the first day we had a buy signal generated in the first part of the day as the price rejected the central pivot point and the crossover between the 80 line and the 200 EMA indicated an uptrend. During the New York session we had a sell signal as the price broke below the central pivot point and the 200 EMA crossed above the 80 line. The second day, the price didn't retrace to the central pivot point, so we didn't open a new position. The third day offered a short signal during the London session. You can see the price closing below the central pivot point, move confirmed by the 80 line and the 200 EMA crossover. In the last part of the day, this system generated a buy opportunity as the price breached above the central pivot point and the AD line crossed above the 200 EMA. During the fourth day, we had two opportunities to enter long on the market when the price retraced to the central pivot point. The first signal was generated at the end of the Tokyo trading session, and the next one during the London trading session. Here's another example, the Pound USD. This time we have 5 trading days, during which at least 3 days are trading in a range. Please keep in mind that you have to adjust the time frame. If in the previous chart we used the 15 minutes time frame, on this pair we use the 30-minute chart. You have to backtest and see which time frame offers the higher probability setups. Now, as you can see, despite the fact that during first 2 days the price action was extremely choppy, this setup offered a few short signals below the central pivot point. This was due to the fact that the AD line was below the 200 EMA, suggesting a downtrend. The third day, we had 2 good signals as the price retraced to the central pivot point. Observe how the AD line is moving lower and lower, confirming the downtrend. The fourth day started with a short signal below the central pivot point, offering an excellent trade. The end of the New York session brought a buy signal above the central pivot point, confirmed also by the AD line and the 200 EMA. The fifth day was a no-trade day, as the price reached new highs and failed to retrace to the buy area, meaning around the central pivot point. By now, I hope you are convinced by the power of this setup. You will be on the right side of the market most of the times. Of course, you will take some losses, but if you stick to the rules, at the end of the week you will be in profit. Remember to take the trades only around the central pivot point. Stick to this important rule, as it will benefit you in the longer term. You will be tempted to take trades in other areas of the chart, but my advice is to be disciplined and enter the market at the central pivot point. Take a part of your profits at S1 or R1 levels and leave the trade run to its full potential by moving your stop loss to break even. Backtest other currency pairs, commodity or even cryptocurrencies and see which time frame is suited for them. And very important, don't trade stocks with this system because the AD line does not include gaps in its calculation and the signals will not be 100% reliable. Test this strategy for a couple of weeks and come back here and share your results. If you have any other filters or tools to improve this setup, I look forward to hear from you in the comments section. If you got any value from this video, please consider subscribing to our channel and give us a like, as it will help us to grow our channel in the future. Until next time.